Tired of living paycheck to paycheck? Are you tired of feeling like you're just barely getting by? Do you dream of having more financial security and freedom? Most of us know what it's like to feel stressed about money. But what if I told you that you can turn things around and make money work you instead of the other way around? Keep reading, and I'll share a bonus tip at the end that can put you on the fast track to financial peace. Money isn't everything, but let's be real, money isn't the answer to everything, but let's face it, it's pretty important. Money gives you choices. It can provide security, open up opportunities, and allow you to live a more comfortable life. Think of money as a tool. Used wisely, it can help you build the future you want. The first step is shifting your mindset. Instead of viewing money as something that just comes and goes, start thinking of it as a seed you can plant and grow. Building a solid foundation. Before you start investing and building wealth, you need a strong financial foundation. This means getting your finances in order. Start by creating an emergency fund. This is 3 to 6 months worth of living expenses set aside in a safe, accessible account. Having this safety net will protect you if unexpected expenses pop up. Next, create a budget. The 50-30-20 rule is a simple but effective method. Allocate 50% of your income to needs, 30% to wants, and 20% to savings and debt repayment. Investing, making your money work. Investing is a powerful tool that can help you achieve your financial goals and build wealth over time. By putting your money into various investment vehicles, you can potentially earn returns that outpace inflation and grow your wealth. Once you have a handle on your spending and saving, it's time to make your money work harder for you through investing. This means taking the money you've saved and putting it into assets that have the potential to grow in value. It's important to start with a solid financial foundation, which includes having an emergency fund and paying off high-interest debt. There are many different investment options, but let's focus on a few basics. Understanding these basics can help you make informed decisions and create a diversified investment portfolio that aligns with your financial goals and risk tolerance. Stocks. When you buy stock, you're buying a small piece of ownership in a company. This means you become a shareholder and can benefit from the company's growth and profitability. Stocks can be bought and sold on stock exchanges, and their prices fluctuate based on market conditions and company performance. Stocks have the potential for high growth, but also come with risks. The value of stocks can go up or down, and there's no guarantee that you'll make a profit. It's important to do your research and understand the companies you're investing in. Diversifying your stock investments can help manage risk. Index funds and ETFs. These are like baskets of stocks that track a specific market index, providing instant diversification. Index funds and ETFs are popular because they offer a low-cost way to invest in a broad range of stocks. They can be a good option for investors who want to minimize risk and achieve steady growth over time. Real estate investing in property can be a good long-term strategy, and you can even invest in real estate through REITs, real estate investment trusts, without buying physical property. Real estate investments can provide rental income and potential appreciation in property value. REITs allow you to invest in a diversified portfolio of real estate assets, offering a way to gain exposure to the real estate market without the hassle of managing properties. Bonds. Bonds are less risky than stocks and provide regular interest payments. When you buy a bond, you're essentially lending money to a government or corporation in exchange for periodic interest payments and the return of the bond's face value at maturity. Bonds can be a good way to generate steady income and preserve capital. They are often used to balance the risk in an investment portfolio. Creating a balanced portfolio that includes a mix of stocks, bonds, real estate, and other assets can help you achieve your financial goals while managing risk. It's important to regularly review and adjust your portfolio to ensure it remains aligned with your investment objectives and risk tolerance. Working with a financial advisor can provide valuable guidance and help you make informed decisions. Remember, investing is a long-term journey. It's important to stay patient and disciplined even during market fluctuations. By making informed decisions and staying focused on your financial goals, you can make your money work harder for you and build a secure financial future. Section 5. The magic of compounding, earning interest on interest. Compounding is the most powerful force in investing. It's essentially earning interest on your interest. The earlier you start investing even small amounts, the more time your money has to grow exponentially over time. Let's say you invest $1,000 and earn a 7% annual return. In the first year, you'd earn $70 in interest. But in the second year, you'd earn interest on $1,070 and so on. Over time, compounding can turn small, consistent investments into significant wealth. Section 6. Don't put all your eggs in one basket. Diversification is key. You've probably heard the saying, don't put all your eggs in one basket. The same principle applies to investing. Diversification means spreading your money across different asset classes like stocks, bonds, and real estate. It also means diversifying those classes. For example, investing in different sectors of the stock market or different types of real estate. Diversification is crucial because it helps reduce risk. If one investment performs poorly, others can help offset those losses. Section 7. Creating streams of passive income. Passive income is money you earn that doesn't require you to trade your time for it. Unlike a traditional job where you exchange hours for dollars, passive income allows you to earn money continuously with minimal effort after the initial setup. This can provide financial freedom and flexibility, enabling you to focus on other passions or simply enjoy more leisure time. It's about building wealth that works for you, even while you sleep. Imagine waking up in the morning to find that your bank account has grown overnight. This is the power of passive income. It can come from various sources, each with its own set of advantages and challenges. There are countless ways to generate passive income. Some popular options include rental income, dividend stocks, and online businesses. Each of these methods requires different levels of investment, knowledge, and time commitment, but they all share the common goal of generating income with minimal ongoing effort. Rental income. You could purchase and rent out properties. This can be a lucrative way to earn passive income, especially if property values and rental demand are high in your area. However, it also requires significant upfront capital and ongoing management, unless you hire a property manager. Dividend stocks. Invest in companies that pay out a portion of their profits to shareholders. This can be a great way to earn passive income with relatively low effort. By choosing stable, high dividend-paying companies, you can create a steady stream of income. However, it's important to research and diversify your investments to mitigate risks. Online businesses. Explore opportunities like affiliate marketing, online courses, or creating and selling digital products. The internet has opened up numerous avenues for generating passive income. For instance, you can create an online course once and sell it repeatedly, or you can earn commissions by promoting other people's products through affiliate marketing. These methods often require creativity and marketing skills, but can be highly rewarding. Remember, building passive income streams takes time and effort up front, but the rewards can be life-changing in the long run. It's essential to stay patient and persistent, as the initial phase can be challenging. Over time, as your passive income grows, you'll gain more financial security and freedom, allowing you to live life on your own terms. So start exploring your options today and take the first step towards financial independence. Section 8. Stay focused on your goals. Building wealth is a marathon, not a sprint. There will be ups and downs in the market, and it's easy to get sidetracked. That's why it's essential to track your progress. Regularly review your budget, investments, and progress towards your goals. Stay consistent. Even small, consistent contributions to your investments can make a massive difference over time. Stay informed. Continue learning about personal finance and investing. Knowledge is power when it comes to managing your money wisely. Section 9. Bonus tip and conclusion. Your journey to financial freedom starts now. This is the moment you've been waiting for, the final piece of the puzzle that will set you on the path to financial independence. It's time to take control of your financial destiny and make your dreams a reality. Ready for that bonus tip I promised? This tip is the key to unlocking exponential growth in your financial journey. It's a strategy that has been used by successful investors for decades, and now it's your turn to harness its power. It's simple but powerful. Reinvest your earnings. By reinvesting, you allow your money to work for you, creating a cycle of continuous growth. This means that every dollar you earn has the potential to generate even more income, leading to a snowball effect of wealth accumulation. When your investments generate profits, reinvest those earnings back into your portfolio. This strategy not only maximizes your returns, but also minimizes the impact of market fluctuations. By consistently reinvesting, you can take advantage of compound interest, which Albert Einstein once called the eighth wonder of the world. This accelerates the compounding process, allowing your wealth to grow even faster. Imagine your investments as a tree. The more you nurture it by reinvesting, the stronger and taller it grows, providing you with a bountiful harvest in the future. Remember, taking control of your finances and building wealth is a journey. It's not about getting rich overnight, but about making consistent, informed decisions that lead to long-term success. Set clear financial goals, create a plan, and stick to it. It's about making informed decisions, being patient, and staying focused on your long-term goals. Surround yourself with knowledgeable advisors, stay educated about financial trends, and don't be afraid to adjust your strategy as needed. Patience and perseverance are your best allies in this journey. The sooner you start implementing these strategies, the sooner you can start living with more financial security and freedom. You've got this. Embrace the journey, stay committed, and watch as your financial dreams become a reality. Your future self will thank you for the steps you take today. So take that first step now and embark on your journey to financial freedom.